Hey everyone, welcome back to Weekend Market Outlook. This is for the 28th of October 2024. We've got a couple more days left for October, and then we're going to start November, which is a very important month for the market, especially in the Forex market. All right, let's take a look at last week's numbers here. We have Bank of Canada interest rate decision. As expected, we got a jumbo cut from them, which is a 50 basis points cut. Everything else in terms of whether or not we have a major data, last week we don't actually have a lot of major data, but if you take a look at the numbers here from the US economy, it's all in the positive side more or less, and that kind of weighs in terms of the dollar strength, and this is something that we're going to be monitoring for this week as well. All right. Obviously, Labor Week, we have a lot of numbers today, this week, and on Monday we don't actually have a lot, but on Tuesday we're going to be looking at the JOLTS job opening numbers here, and then ADP NFP number. Obviously, last month was kind of a precursor into how market has been pricing in for the NFP, and obviously this is going to be something that we are going to be taking a look at as well. But overall, in terms of the labor numbers here, the consensus is kind of a little bit lower compared to the previous month. We got the ADP NFP numbers 143,000 previous month. Expected gain is just 101,000, and then we have the weekly jobless claims. Obviously that's going to be on Thursday, and then we have the PCE numbers as well. That's going to be released on Thursday. Obviously this is going to play into how the FOMC is going to be looking at their interest rate decision, which is going to be on the 7th of November, which is going to be the week after, and then Friday NFP numbers. If we take a look at the NFP numbers, obviously last month's number was a huge surprise to the upside, 254,000. We are expecting revisions to happen here. In terms of the previous month's number, we're going to be looking at 111,000 gains for October. As ISM manufacturing numbers here, again, we're looking at a little bit of an improvement, but overall, since they're all below 50, we're still looking at a little bit more of a contraction for the ISM numbers here. The unemployment rate here is expected to remain stable at 4.1%. So I think the key movers is definitely the average hourly earnings and as well as the NFP monthly NFP gains. Unless the unemployment rate kind of comes in as a surprise, that's going to be the main focus by the FOMC to look at the labor market in terms of how strong it is. Okay. Let's just jump straight into the technicals here. Aussie USD here, a couple of changes to take note of. We do have a change of character for the Aussie USD here. Market has broken below 66.25, which is the previous low in the month of September. Right now, price is currently trading below 66 cents as of time of recording. Obviously, this opens up a lot of room to the downside, right? We're not looking at support coming at 65 cents even at this point in time. We have a couple of support here about 65.75, but once we're down below 65.75, it actually opens out further drop to the downside towards 64 cents on the Aussie USD. So we are looking at a little bit of transition here. We do have that change of character that happens pretty much at about the same time with the transition below the Ishimoku cloud. So this is something notable here. So I think in terms of dollar strength, especially coming into November, we do expect the US dollar to come in a little bit stronger, at least for the next 2 weeks here. All right, Euro USD here. Right now, this is also below 1.08 in terms of market testing 1.0850, 1.09 range as a resistance. It has kind of done that on Friday. Right now, as of Monday, it is currently trading below 1.08. We had a weekly close below 1.08, and obviously this week is crucial. If we have a monthly close below 1.08, that means a lot to the Euro USD in terms of how trend has changed. We have that change of character below 1.10, and then throughout the month of October, we have been trading lower here on the Euro USD. We do have a little bit of support coming in at 1.0750 here, but below that, really, it opens up further movement to the downside. At this point in time, we're looking at a move below 1.07. The next available support is actually located pretty much at about 1.06675 here on the Euro USD. All right, Pound USD. For the Pound USD, we have transitioned below the Ishimoku cloud, so I think bears have taken control of the 1.3 level, and last week we actually saw a little bit of a retest at 1.3, and I highlight that with the new circle here. So we do have that retest of 1.3, and right now market is currently projecting a further drop to the downside. We do have immediate support at previous resistance in the month of June. That's going to be about 1.2850 level, but below that 1.2850 level, we're looking at a little bit of a further push to the downside towards 1.27 up to 1.2660 level there on the Pound USD. And lastly, this is the dollar Japanese yen. And overall, we don't have the final results of the election that took place in Japan yesterday, but we can clearly say right now there's going to be some political uncertainty going on in Japan right now at this point in time. That's the reason why you're looking at a weak Japanese yen there. We can see that push on the dollar Japanese yen as the market opens with a huge gap. Now, the LDP, which has been the ruling party in Japan, basically didn't win enough seats to kind of rule as a single party. So they're going to be looking at coalitions there going forward here. But right now, this is definitely something to take note, because this is the first time this has happened in the last 15 years. The last time this happened was 2009. I think there was just basically a lot of political scandals around the LDP, and obviously, voters have voted, and right now LDP is not the, kind of majority party at this point in time. So we don't know how this is going to play out, but obviously with the shift of government here, the newly elected prime minister Ishiba doesn't last long. Obviously, we don't know if he's going to be re-elected again, but we're going to be looking at leaders that might have a different view in terms of whether or not they want to take in the interest rate hikes that Bank of Japan has already been planning. Obviously, today is 28th. We have the Bank of Japan coming up with a decision on 31st of July. So we got, kind of a double whammy here on the yen process. Obviously, the election results haven't, it's not final yet. We're going to be looking at that and whether or not the new candidates are going to be in favor of that interest rate hikes, and whether or not Bank of Japan is actually going to be hiking interest rates. At this point in time, they do mention that, obviously this is Bank of Japan we're talking about. They will say whatever they want to say in favor of the Japanese yen, and we take a look at the Japanese yen being weakening here for the past month. Throughout the whole month of October, it has been weakening significantly, to the point we are actually coming back to the levels before the intervention that was done, which is about 155 to 160 level there. So we're now very close to 155, and obviously 154.50, 155 is going to be the level you want to keep an eye out for. I think we might actually see a little bit of profit taking happening around those level, but if not, if long position traders kind of hold on to their positions and price break above 155, then it actually opens up for the gain to the upside 158, 160. That could be possible, but at this point in time, we do see that transition above the Ishimoku cloud. So generally, any pullback is likely going to be a buy on the dip scenario here. A couple of levels to keep an eye out for is definitely 152 and 150. Those are going to be a buy on the dip levels that market is going to be keeping an eye out for. All right, so with that, good luck with your trades for this week, and I'll see you soon.